Hey guys, let's talk about one Marina Gardens that just sold yesterday. 37.1% at launch, average price of 2953 PSF. I think the developer did quite a good job in that sense because in this current market where economy is rather uncertain because of the ongoing trade wars like what we mentioned at the previous videos, and they still manage to sell this amount. Keep in mind 37.1%. We need to be more objective because a lot of people will think that 37.1% is nothing much to talk about, because especially Lentor Central sold at 90 something percent for launch. But we need to know that back then 2018 2019, if a project hit 20 something 30 something percent sold out rate on the launch weekend is considered a very successful performance already. A lot of times a lot of people think, hey, the faster the project sell, it means it's very good for the first mover buyers. Actually, not really. Quite a lot of projects that make money over time are those that manage to stage their prices over time. They slowly sell, and then they have time, because the thing you need to understand about developers is that they have actually quite some time. Over time, if they are able to slowly move their price up, it actually benefits the buyers rather than them clearing a lot of stock and having not enough time for them to push up the prices. And in such a way, there will be a big time lapse between the last transacted until the next time when it hits the sub-sale market, especially nearer towards the TOP after all the SSD, everything else. Eventually, this won't exactly benefit those that got in early but didn't get the developer to push up their prices. So let's take a look at this article, a quick one, before we jump into the rest of this analysis. Singaporeans made up 83% of buyers, the remaining PRs and foreigners. 17% PR and foreigners are compared to the typical OCR project. This is considered very high already. Global market uncertainties and also volatility because of the US tariffs, like what we mentioned just now already. Despite all these challenging environment, they still manage to do at this performance, because quite some people are still anticipating decline in interest rates. Honestly, for me, I have no idea also, because first thing, you have the potential inflation because of tariffs, but the other thing is because of the global market uncertainty, the economy may still come down, so end up interest rate may still come down. So it's a little bit like 50-50. I personally think it's a little bit more like a 60-40, 60 more towards the decline, 40 more towards the increase. But who knows? I mean, it's no point for us to kind of guess this, because ultimately, if you buy a property for long-term performance, you don't want to be hopping around speculating when it comes to such a big quantum, big ticket item. Then no point for you to go and think about all these smaller things, because ultimately, when it comes to interest rate in local market, it is not going to differ too much. But of course, when we are talking about too much, as in we are talking about percentage points, but when it comes to the absolute interest quantum, then of course it's quite a lot of money lah. It can be a difference of maybe $1,000-$2,000, which is a lot of money for most people. I mean, unless those, we are not talking about ultra high net worth. If you're talking about 1-2% difference compared to now, then we already seen over the past few years, property market is still moving. So as long as the fundamentals of the market is still not affected, then we don't have anything much to be worried about. Conversion rate of the checks at about 40%, which is very high compared to the typical range of 30-35%, which reflects buyer confidence and sustained demand in the local market, which is kind of expected. I expected them to do pretty well, kind of expected in a way, because it's quite typical of Kingsford is that they tend not to be too ambitious in terms of the floor loading, which I mean the price difference in terms of the different stories, because some developers like to check it up a lot, and then the higher floors become way too expensive, the lower floors become a lot cheaper. But for Kingsford, they are pattern. So the important thing is you need to study the developer strategy. Not all the projects will be the same for sure, but there will be a higher chance of them adopting the same strategy generally, from what we've seen at Trump Park, what we've seen at Momentum Park, or this. Therefore, it's kind of expected that I would foresee previously that they would have a very reasonable price loading, and true enough, it turned out. And I think it was surprising to a lot of people that end up, you can see what some of the first few units that were taken up were the very high floors one. Those guys, I think they are duly rewarded because this very nice view. But we'll talk about that later. These are the perspective of OMG, which is quite an I think they purposely put that name because it's quite a nice easy way to go to remember. Some of the figures: land size, number of units, and then expected TOP, which I think likely will be 2028. Car park, not as many because of 445 because of the prevailing regulations around this area. Surprisingly, maintenance fee is pretty cheap. For the one bedrooms, is actually expected. All these you realize compared to last time, now they put estimated because it may be subjected to changes. Now expected maybe slightly below 300. In fact, it's actually cheaper than some of the OCRs. Imagine staying at this location, pretty much CCR location, but unfortunately it's still classified under the RCR, which, like we mentioned a lot of times before, doesn't exactly matter to me if you're looking at it from investment point of view. Because if you are talking about that, then I don't think Bayshore today, later we'll talk about that again, upcoming prices at almost same price as this piece of land. It's going to be OCR, this is going to be RCR, CCR, so well, it leaves a lot to be explored. Then this is the site plan, and then some of the facilities that are upstairs. Now we can see this is the visualization of OMG. A lot of big empty lands over here, but we know that all these are going to be eventually built out. How long will it take? We have no idea currently at this point. Eventually it should be blocked, unless those that are facing the Gardens by the Bay, which I don't think they will be moving it that soon. Schools, unfortunately for now we don't have, so those people who are looking for schools, I don't think this is where you will be looking at for sure. But those people that are looking at rental play, then probably yes. And this is the master plan movements over the years. Back in 2008, it was still kind of like a yellow side, and then 2014 is shifted to all these colors, which has kind of remained, but they kind of play around with the figures a little bit probably. But the one thing was, I remember last time I was in bowling CC, and then there was this Victor Super Bowl somewhere along here, and I remember walking all the way back to the MRT there in a bit to save money. Yeah, I mean, I didn't come from a rich background, so unfortunately, but I think it was a good thing. It taught me a good lesson about being prudent about your finances. But it's pretty more nostalgic to kind of feel that this is where I spent quite a few years of my growing up years. Anyway, let's just move on. But I was actually kind of thinking, where the hell was this Victor Super Bowl compared to the current location? But it's good to know that it's quite similar to where Gardens by the Bay is, or rather where Garden by the Bay actually is sitting on. Then I saw this on the Business Times, which came out yesterday. A lot of people, those people who are looking at high rental yield, they'll be looking at, especially District 1, they'll be thinking, hey, if I buy CBD, I'm going to get a very high rental yield, correct? Which is not wrong at all, because for 3.9, 3.8, we are talking about gross rental yield. 3.8, 3.9 is considered very high for compared to a lot of other condos. But like what we mentioned previously already, and if you know how to do the sums, I shall not be doing here today because this video overrun like mad. But if you know how to do the sums, does it actually make sense? Because all these we'll be talking about maybe these two. We'll look at these two. Okay, these two are newer compared to the sale at Marina Bay. So 3.9, very attractive for a lot of the rental investors. But let's take a look at some of the charts that we are seeing, some of the top condo searches, which I shall not elaborate about their popularity. And then these are the price performance of these two condos, which I highlighted just now, from 2017, end of 2017 to the last quarter before. Okay, so this was Q1. We're not talking about Q2 because Q2 barely just began only. And then why did I put in these three? Because I'm just using it as a comparison, because like what I mentioned, a lot of people like to buy CBD area because they are renting it out. They want to go for high rental yield. But what they do not realize is that they forgot to look at the other side, which is actually more important, the capital loss. Because you can have some of the highest rental yield, but if your capital is not protected at all, then what is the point? Because it's very similar to what we mentioned about stock. Some people keep going for pure dividend, like maybe some of the REITs, the dividends, no doubts about it, they are very high, 5 to 6%, maybe even higher, some of them double digit figure. But if the price itself of the REIT comes down crashing, then it defeats the whole purpose of the rental yield. Same goes for this kind of real estate. You may have very good rental yield, but imagine over the period of maybe about 7 years. Over 7 years, you are basically losing 1 point something percent a year on average. So that means if let's say we simplify, let's just make it very, very, very simple. So even if you 3.9 and then you minus 1.2, basically you are getting the same yield as maybe some guy that is yielding 2.7% rental yield. So let's not even talk about the difference in terms of capital gain for the other side. And why did I bring up these three others is because these three others are far away, far away from the central of the island, and they are far away from MRT. I think it will be a good comparison because people will naturally link good location to CBD area, town area, compared to those that are very far, typically what people would like to call ulu. These are the three typical projects. Okay, Loquest not exactly close at all. This one also not close at all. This one, by the way, this is in Tampines. This one nearer towards Bukit Batok. And then this one, some people may argue, hey, this one is a LRT, but LRT eventually still goes towards the MRT. So isn't that similar to taking a bus? Right? You get where I'm coming from? That's why I think it's not really exactly fair to mention that, hey, Far Park Botania is an MRT project, because it is definitely not. If somebody has to take an LRT to the MRT, I think it is fair enough to say that it's comparable to the bus stop. Alright, if you feel that that is not justifiable, then feel free to comment. I think it is normal to have very different opinions. But if you have to factor in the travelling time, then I think it's fair enough to compare to a bus, especially for certain LRT stations. Those people who stay in the area, you will know that during peak hours, you may or may not be even able to squeeze into the LRT trains. On the other hand, these three, like what I mentioned, very far ulu location, they have appreciated between an average of 20 to 28%, which makes it very, very attractive even if their rental yield is low. But on the other hand, if we take a look at this other chart over here, which calculates the average rental yield for all these projects, it seems that these three, despite being the ulu name, in terms of investment wise, let's not talk about the location for sure. If you don't like to stay in this location, no point talking about it. But if you're talking about pure investment, that's why it is very important for you to talk about, hey, are you just buying for pure investment, or are you buying for own stay? If you want to buy for own stay, you want to stay near towards town, then I think it's totally fair enough. But if you are buying for investment, you have to factor in a lot of numbers into play. The surprising thing to a lot of people is that these three, in fact, have comparable or even higher rental yield than the other two. So it's not just that they have an advantage in terms of capital gain, they also have an advantage in terms of rental yield. Which leads us to the question, are these people buying more for investment, pure investment, or are they buying a status? So that is something for you to think about. Looking at the competition in the area, for OMG, you can see that this is 2 km. Typically, I use 1 km because if let's say 1 km, there's only one guy, which is Marina Bay Residences, within the 1 km range, because we know that this is quite an empty piece of land, nothing much ongoing over here for now. But so if you're looking at it from a pure supply point of view, then this has no competition other than this guy over here. But we know that if people look around this area, they will definitely look a little bit further, especially those that are nearer towards the MRT and supposedly cheaper in terms of the PSF. These are your competitors, which has a total units of about almost 5,000 plus, from a measly 400 plus straight away 12, maybe even 14 times to 5,800 plus, which is definitely not something to ignore. So we put out some of the competitors for OMG in this area, and you can see generally their price trend for this is that they have been trending down. I don't have to point out one by one, but you can see that they hasn't really been doing well. So will this be the same for OMG? I think that is some risk that those people who are buying here for investment, like I said, investment, then you have to be really considering this factor, that the surrounding hasn't really been doing well in terms of PSF. Later we'll bring up some other points, but I think this is an important factor. So we look at some of the numbers that in terms of profitable and unprofitable transactions of these developments. Marina One Residences 2017, I have blancoed out some of the unit numbers for PDPA purposes, but if you look at this, basically almost all of them did not manage to make money. This guy I think barely managed to break even after all those expenses, probably make a little bit, maybe 5 figures at most. How do I figure out? I think these are basically those that bought more recently and then sold it more like an investment and not really a long term investment like a 15 to 20 years kind. On the other hand, a lot more ended up losing money for Marina One Residences. And mind you, this one was only built in 2017. So this is actually a very new, very nice project. I still feel that Marina One and Mora is still a very nice project. In fact, some of the celebrities stay there, but I shall not mention the names. But if you look over here, the profits or rather the loss is quite staggering over here, right? So this is where you see the concern is. Next one, the sale. This one managed to make a lot of money over here, but of course not easy to buy in the first place. But this one was a real fire sale, 1-1 something. If you're able to spot something and if you're fast enough, I don't think this one was even on the market at all, probably. Probably not so simple of a deal, probably maybe something, but I would say this one, let's not make some guesses. I think this will be an outlier that we shall not really consider. There are some people that made quite a lot of money, but quite a lot of people also lost money in the first place. I would say the percentage of losers will be much higher than the winners, and all these basically are people who lost money. So you can see percentage of winners versus losers so far generally hasn't been very optimistic. Same goes for Marina Bay Suites, and these are those people who have bought for very, very long ago. So it's an entirely different market. I don't think it's a fair enough factor to take into consideration when it comes to analyzing profitable transactions. On the other hand, this one, the one that managed to flip the latest was already way back in 2015. So I wouldn't say this is exactly a very good point of reference. In fact, why are there so few people that bought in the past recent year and sold? Probably because they don't want to realize their loss. And if you look at this is like almost 10 years or 9 years and losing 2.05 million. It is definitely not something that most people can stomach. Marina Bay Residences. Okay, so this is Marina Bay Suites, Marina Bay Residences also. Not too much. In fact, this one is a champion, but I think this was like a way long ago, totally different market already. The rest, as you can see, not doing well. Unprofitable transactions over here also, all the way until maybe around this period, all of them lost money. This is quite a substantial amount. Okay, so does it mean that OMG is hopeless when it comes to making money? The other perspective that you may want to look from is Lentor collection, which some people think that Lentor Modern got into first mover. Not wrong, but I don't think the first mover thing was really a big factor, because ultimately it really depends on the price point of the development itself. Not wrong to say that OMG is going to be the first mover in this entire marina area, so I think this is a fair enough point. Later we'll talk about price again, so I shall not be talking about this. Basically, you have quite a lot of things are coming. You have both the red color plots and also this is not really a red. I can't remember what you call this. Is it maroon or something? I'm very bad with colors, so give me a comment that tell me what color is this. I'm very bad. I'm not an artistic person as you can see by now from all my videos. I can't really be bothered too much about aesthetics. I'm always more bothered with the numbers and the logical aspects of things. This one confirm I think is white color I know this one is white color, and here states that this is white color. So white zones are supposedly the most valuable on the entire island. How will it end up going to be, that one we have no idea yet, but I think these two are out for application already. Let's see how it goes. Then this is the part that we may want to take a look at. Marina One Residences versus OMG. So both of them very similar names. One is Gardens, one is Residences. The ones that were sold yesterday, even though supposedly the PSF is a lot higher, because if we look at this from the PSF point of view, which is that if OMG is entering on average here, that means that leaves a very big price gap between the dark blue one, which is Marina One, which is averaging around 2001 PSF. This average PSF gap of about 700 to 800 PSF gap. Now back to this. If we just look at the PSF point it will have a very big margin. But because of the new regulations, the harmonization, and a lot of the cleaning up of the layouts, because we know that the older layouts tend to be a lot more inefficient, then after cleaning it up, you can see that the quantum of the one bedders are only 1.2 something, or even as low as 1.1 something for OMG. On the other hand, Marina One residences for one bedders are already 1.5 million, even though the PSF are below 2,000 PSF. So you can see that the subpar performance of Marina One residences may be attributable to the higher price quantum of the one bedders over here. Okay, same goes for this one, 1.388 million. These guys all lost money, which is very, very, very unfortunate. Back then, I remember that time during the COVID period, there were so many opportunities, good opportunities, but these guys managed just to convince themselves to get into MOR, and unfortunately, they were disappointed in that sense. So if you look at the layout over here, basically, if we compare those with MOR and OMG, so this one is OMG, 431 square feet only. The other one is already 710 square feet. Let's take a look. Master bedroom size, I think, is pretty much similar. Maybe this one is just a little bit bigger. Balcony is definitely bigger. And then you have your aircon latch for sure. Now this one don't have aircon latch. And then you have a walk-in wardrobe, which this one doesn't have. And then master, I think this one probably a little bit bigger over here also from the looks of it. Living room probably not as big, but utility wise, generally I think it's pretty much almost the same. Now imagine paying for something that is brand new and also much more efficient layout. There may be a chance that this OMG may still stand a chance over MOR eventually in the future. I wouldn't say for sure that I have a lot of confidence, but if there is a selling point for OMG, then probably they may have that plus point. Same goes for two bedders. I shall not elaborate too much, but you can see the PSF is a lot higher compared to MOR. Again, a lot of them lost money. This one overall net definitely lost money. This basically is the same unit. They still lost money. And this is 1163 square feet for two bedders versus a 646 square feet and a 721 square feet. You can see the quantum difference. This one is 1.9, this is 2.1 versus a 2.3 thereabouts. Over here, difference. In fact, the room over here seems to be smaller than the one at OMG. Alright, and then master, I think this is probably a little bit bigger. Living room, also longish. I think maybe over here in the private live lobby eats up quite a lot of space, which is pretty much unnecessary. So in terms of layout efficiency, I think OMG definitely takes it over here. Same goes for the bigger units, which is the 3-bedroom. This is actually not a 3-bedroom, this is actually a 4-bedder, but let's just take a look at these 3 bedrooms over here, which is about 3.5, 3.6, 3.6. And then over here, these are the much larger 3 bedrooms at MOR, and they are transacting after loss of 400 plus thousand at 3.4 plus million, 3.3, 3.6, 3.7, and this was quite a few years ago. You can see that the newest ones were actually running losses over here. And this one doesn't have a caveat, but this is definitely running a loss. So you can see the quantum is quite comparable now. The one bedders have a much lower quantum. Same goes for the two bedders, but when it comes to the three bedders, it's quite similar. So two bedders, like what we mentioned just now, 2.1 and 1.9 versus 2.3. Whereas for the three bedders, it will be 3.5, 3.6, slightly a little bit higher. But then again, we know that those people who buy around town, they like to be buying big units, so there may be a reason why Kingsford managed to price this at a much higher quantum and probably comparable to the resale options. This is the layout of the 3+ study for Marina One. So you can see quite a bit of wasted space. I shall not elaborate too much over here because we are running way over time. And but you can see generally the new one, OMG, is quite comparable in terms of utility of the space. In fact, the living room seems to be a little bit more luxurious compared to the longish one. And the other one that we want to wrap up with will be the land price of Marina Garden lanes, which is basically OMG. Previously, when they were bidded at this price, people were laughing at them. But now it seems that Bayshore has already caught up. Very similar pricings, but very, very, very different locations. This one is much nearer to Changi, in fact, than this one. This one is almost at the center of town already. And theoretically, if you're nearer to town, theoretically, you should be much more expensive. But we are seeing a very different story in just a span of 1.5 years. Is this actually overpriced or is this overpriced? I think I leave it to you to decide. Overall, conclusion wise, I think what we see over at OMG is that there is quite some risk in terms of the resales because those hasn't really been performing. It has been subpar all along. But if we look at OMG from the layout and also the price quantum, then it may still stand a little bit of chance. I wouldn't say is a guaranteed formula for success in such an area where a lot of people are still concerned that there is basically nothing over here other than Gardens by the Bay. You don't have much things for eating, you don't have basically all the amenities. But it's a new township. A lot of things are still uncertain at this point of time. If you are buying for rental, I think not too much to be worried about. But if you're buying for investment, I think it still leaves quite a lot of question mark. Overall, if you want to take a little bit of risk, I think OMG may still be okay for you to go and try. But I think in this market, there will be quite some other better opportunities comparatively. That will be the end of our video today. If you like what I share here today, please help to like, share, subscribe. And if you feel you need help, please feel free to DM. That will be all we have, and see you guys. Take care. Bye-bye.